Hello everyone, and welcome to this first video that will be part of a series of videos on how to use the Tradytics tool that we have in our Discord. And the first tool that we're going to start looking at, it's a query command, which is the Netflow tool. This is a very useful tool. To me, I think it was life-changing. It was very helpful in that it confirmed my bias towards the market, and you can definitely use it whether you're trading indices or whether you're trading like for futures or you're trading ETFs like SPY or the Qs, or even if you're trading particular stocks. And so I will go ahead and show you a brief yet hopefully good enough description about this tool and how to use it and how to utilize it for your trades. So what is the NetAR Flow tool? The NetAR Flow tool is a tool developed by Tradytics, which is a company that developed that software, that uses live data for flow algos as well as machine learning algorithms to try to determine the sentiment for the market, whether it's going to be bullish, bearish, or if it's indecisive, aka choppy. And of course, this is available on our Discord by query commands, meaning that you will have to type in a command in the live chat section in order for you to see this data. So we start with how to query. So let's start by talking about, querying this data for a particular symbol. So let's take here meta as an example. If I want to see the flow for meta, or the sentiment for meta, is it bullish, is it bearish, or is it choppy? And so to type in the command, all you have to do is type in tr hyphen netflow as one word, and then you put a space, and then meta, which is the name of the stock. And by doing this command, you will get a chart showing, which we will talk about here in details here in a minute, but it will show you a chart showing the overall sentiment for Meta. Now, this command over here, when you stop after the symbol of the stock, it's not going to be restricted to a certain time frame. So it's going to give you the overall net flow for Meta, including flows for calls or puts that are purchased for 2023 or even further than that. And so to me, yes, it gives somewhat of a clear idea, somewhat of an idea, but it's not as clear as a shorter time frame, especially for me that I am a short-term trader. For the most part, I'm a day trader. I really don't care if someone is buying calls on Meta for 2023. What I care about is that I'm buying, I'm moving to the next resistance or to the next support for my immediate trade for the move that I'm taking. And for me to get a better idea for that type of flow, I like to have it restricted kind of, or to show me the immediate time frame to exclude all of these further expiration calls and puts that are being bought into Meta. Um, because it gives me a much more focused or a much more clear picture, on what the sentiment is looking like for the immediate future. Of course, the two together will do a great combination if you look at both of them, and wouldn't hurt to always look at both of them. But for me, I'm always concerned with the immediate time for, the immediate future or the immediate or the close time frame. And so to do so, there will be two numbers added after the symbol of the stock. So you would put TR hyphen net flow space meta, and then you'll put another space and you'll put in a number over here and space and another number. So what does this first number mean? This first number basically is what you're telling the bot to get the data from. So number one starts for today. So I want to see the data as of today. So whatever was bought or with the flow that actually was executed today. And the second number is showing the number of days till expiration. So this means that I would like to get the net flow for Meta that was bought today with no further expiration than 7 days. So it's giving you the immediate flow, sort of like for the immediate future. And it's going to exclude all of these options that were bought for, 3 months down the road or 2 years down the road or so. And so the number of historical days that should be an odd number. 1, 3, 5, which is the first number over here, right? Now the second number over here, it should be no less than 3, and it should be also an odd number, 3, 5, 7, 15. But then you can switch to a monthly, which is 30, or 2 months, which is 60, and so on. Yeah, I would say if you want to go further than 2 months, you might as well just go ahead and do the non-restricted command over here, which will give you the overall flow for it. But if you want up to, a couple of months, I would say this is pretty good. You can look up to 2 months and see what the flow looks like for Meta or whichever stock that you're looking at. And so once you type this command and you hit enter, you're going to get a chart that looks like this. Of course, you're going to get one of them. I just provided two examples over here, one for the short time frame one, which is the 1/7, and one for the overall for Meta, which is not restricted, as you guys can see. So here with NetFlow Meta 1/7, as you guys can see, we have three main lines on this chart. One that is white, which represents the price of the stock, which you guys can see over here to the left. You'll see the price of the stock. And then you have the green line, which represents calls, and you have the red line, which represents puts. And then you have this dotted line over here, which is kind of like a break-even point, which is the zero, as you guys can see. So over here, if I want to look and interpret this chart, which also we will talk about this here in a little bit after we show the examples, I'm seeing that calls way higher than puts, and as you can see, they're over the zero for the immediate future, of course. They're over zero, they're higher than puts, right? And even though the price of the stock is actually fallen a little bit over here, but for the immediate 7 days, I'm seeing that the calls are picking up. So usually this flow is a leading indicator for the price of the stock. So this could be something to look at, for example. Uh, Same thing here whenever you're looking at the net flow overall for Meta. I'm seeing both calls and puts being below the zero, so that's really not a great sign. Usually I would like to see it above the zero and to say that there's, major bullish move or a major bearish move, right? And over here I'm seeing that there is a spike or an increase in interest in the puts. As you guys can see, the puts crossed over the calls, which we call a bullish cross. I'm sorry, a bearish cross. However, we're still under the zero, so it's not really actionable over here. And so I would say I'm just gonna wait and see here. Is this going to be, depends on your setup, obviously, but I would say I would wait and see. But seems like there's a lot more puts further down the line that are being bought. And, as we see over here, the price of the stock has been kind of like a bit on a downtrend. So, it may not be a surprise that we see it drop further. Now, you can look or use this tool also for the overall market. And when we say the market, we're usually talking about ES or SPY, right? And instead of actually looking at, for example, Meta or Tesla or Apple, whichever stock, you can look at the overall if you're trading SPY. And and to do so, you'll be replacing the symbol of the stock with the word market. Same command, tr hyphen net flow space market. It's going to give you the overall flow for the market, aka for SPY, and you can actually exclude all the further out expiration dates by restricting the command to say, hey, give me the data as of today that will that was bought that will expire within 7 days or within 15 days or within 30 days. I would say another advice is that the higher the number that you're going to go for the expiration, take higher number for the number of days that you're going to look at. So if I'm going to look at 15, for example, I would say give me the data for the past 3 days or for the past 5 days. What was bought over the past 5 days that would expire within 15 days. So that kind of gives you a better idea the longer back you go to say, okay, well, are they building a bearish position or are they building a bullish position for the market? It kind of gives us a clearer picture this way. Same thing applies for these number commands. The first number has to be either 1, 3, 5. It will be an odd number. The day still expiration cannot be less than 3. It should be an odd number. Upwards you get to 30. And then after that, we're looking at 30, 60. And I would say anything higher than that, just go with the general non-restricted command without having any, don't exclude anything. Because if you're going to look over 2 or 3 months, I would say just go look for the overall net flow for the market. This is also another example here showing the market. The white line here, whenever you're looking at the market, is actually for SPY's price. So that's why I meant what I was saying that when we're talking about the market, we usually talk about ES or SPY. And so you can obviously use this whenever you even trade futures. Look at the overall market because obviously S&P 500, it's an index reflecting, 500 the major 500 companies, and so SPY is an ETF for S&P 500, and so pretty much they move the same way. And so if the flow of the market is bullish, then chances are ES is going to go up if you're trading futures, or if you're trading SPY, chances are SPY is going to go up. Same thing if it's the other way. If it's bearish, it's probably going to go down, and so on. And over here we have an example for the net flow for 1-3. Basically, the contracts bought as of today, for example, that would expire within 3 days. This command over here, 1-3, will be a good command to run as of Wednesday because you'll see till the end of the week, are they looking bearish or not? And this is also, for the overall with no restriction. It also shows over here, as you guys can see, a bullish sentiment to the market. That's not to say that the market is going overall bearish. That's just to say that, today there's a heavy bearish sentiment, but this gives a lot clearer picture, I would say, if you're looking at the immediate time frame. So you can see sometimes that the overall could be choppy or the overall could be bearish, but the immediate future showing bullish. And so that doesn't mean that, yeah, we're going up. It just means we probably have a retracement to the upside, reach a certain point, and then drop down within a week or so. So how can I use this to trade? Well, this tool is not meant to be a signal per se to say, okay, if it's showing bullish, go ahead and jump in, or if it's showing bearish, go ahead and jump in for puts or whatnot. This is as an added confirmation for your trade. So, for example, you will do your technical analysis and you determine your levels, and you would say, for example, if SPY breaks over this level or below this level, I'm gonna, take in a position. Now, if that happens, and you have an added confirmation that the big money is actually moving your way, that will add the confidence for you to take the trade, first of all. And second of all, it'll keep you in the trade for longer. So if, let's just say you are in a put on SPY and the market sentiment is increasingly in the bearish side, uh, chances are you'll probably hold a little bit longer and end up making a little bit more profit rather than just scalping it for a couple of points or something like that. The other thing is that while you're in a trade, it'll give you a signal like, hey, the sentiment is changing now to bullish. It's time to get out because if you're staying in this trade, it's going to go the other way. And so it'll give you again an added confirmation on, how long you hold your trade or if you need to get out of it and secure some profit, or if to enter the trade altogether. But it is not meant to be that signal that, hey, it's showing cross bullish, just go ahead and jump into a call, or it's showing bearish, jump into a put. You have to do your technical analysis. This is just an added confirmation. So I provided here some examples on different types, which is basically three main categories that we're going to be looking at these charts. First one would be the choppy, which is the indecisiveness. As you guys can see over here inside this yellow rectangle, we have both calls and puts below the zero dotted line, and they're very close to each other. This is very indecisive at this point, and as long as it's showing indecisiveness, you're gonna translate that into choppy action on the market. As you guys can see here, this is the price of SPY. It was going between $25 and 24.60. It just kept doing the same thing over and over and over until finally we saw the puts actually breaking above and the calls dropping down, and you guys can see the puts are showing a lot more stronger than the calls, and as you guys can see, the price of SPY is dropping. So that's how it translates, right? And so if I was going to trade an action like this one over here, which is what we started the day with on Friday, actually. This was the chart for Friday, the beginning of the day. Obviously, the longer you wait in the day, the more data you have, the larger the chart is going to look. The first 5 minutes usually are not going to show you a whole lot, or even the first 15 minutes, I would say, until you see an actual uh, trend or an actual sentiment being reflected on the market. That's also to put in mind that you're going to have some days where you have a lot of chop going on, like a day before, the day of FOMC's minute release. Sometimes you might not see a whole lot of movement in the market in the morning or until the data is released, and you just see a whole lot of chop. And so you have to still use your skills that you've obtained throughout your career of trading and use this tool as an added confirmation, but it makes trading a lot easier like this one. And I will show you here why in a minute after I'm done showing these examples of how I used it, for example, on Friday morning and how I figured, okay, well, we're gonna drop. And but we'll get to that example here in a minute. This right here is an example. It's the same day actually, but this is later, later in the day, showing of how the flow went. As you guys can see here, this is a bearish sentiment flow, right? So we started with choppiness, and basically we don't know whether the sentiment is bullish or bearish in the market, and then it started moving up. And as you guys can see, the higher the puts started going, the lower the price started going, right? And the same thing with calls, they actually started dropping, which means there was not a whole lot of interest in calls. The interest in call was dropping and over. Finally, over here, this is an example for a bullish sentiment. This was actually from this was from the 18th actually. And as you guys can see, this is the start of day over here when we were not sure what's going to happen. The calls started breaking above and they're higher than the zero, and the puts are lower than the zero, so they're kind of going the opposite direction over here. And as you can see, that translates into higher highs on SPY. And eventually, towards the end of the day, actually, there was a spike even in the number of calls that were bought. And I don't know if that was actually the end of the day, but I'm just saying at the end of this time period, whenever this command was ran. But it translates pretty good on, on the price. And as you guys can see, as long as we have a higher bullish sentiment, usually you end up making money on buying any pullback. And vice versa. Whenever the sentiment is bearish, if you have any pullback and the sentiment is increasingly bearish, you would feel that you can buy any pullback or sell any pullback, I'm sorry, with higher confidence. So next, I'm gonna show you the chart for Friday morning on how that translated into the trade. So this was the chart on TradingView for ES right before the market opened, and this was the market net flow for today. And as you guys can see, in the beginning of the day, we were showing there was not a whole lot of action in the beginning, the first 5 minutes or so. But then we started showing uh, bearish sentiment. And so if I want to translate it over here, this is my analysis. I already have my analysis in place. And I said, okay, well, we've already talked about the 4260 level before many times, saying that this area over here is a key level. And we rejected once, twice, and we broke through it overnight, which I'm not a big fan of overnight movement. But since the overnight movement was down, they came back up in the morning pre-market, and then it started, it tested this area over here. And from there, this was market open here, I think. Yep, this was market open candle. As you guys can see, the volume over here spiked. And after the first 5 minutes, if we want to get closer, the price started dropping. I'm going to pause it over here. And this is what's happening over here. The put volume is increasing, is increasing, is increasing. Even though there wasn't, later on, there was a little bit of an increase in the calls volume. But as long as these two puppies over here are going opposite direction, it's a valid trade. Now, let's go back over here. I'm trying to determine the time around 10 o'clock, which would have been like 9 o'clock, I guess, on my time over here, which is around this time. There was some call buying. So if I'm going to go ahead and hit play, to me, this was a target over here, the 42.36. And so if I took, well, personally, I took a trade over here. I took a put, but I actually closed it a little bit early, just with it being Friday. But, and I was playing 0 day to expiration. But if it was another day where we expect a lot of volatility or so, I mean, or higher move, or like stronger move, I should say, I probably would have held to the bottom. But normally on Fridays I trade smaller positions, and so I'm not going to close some and leave some. I just, secured the profit and ran with it. But I would have been comfortable as long as the puts were showing going higher and the calls showing lower. But then you started having your calls going above the zero. This is kind of a flag for me if I was in that trade that, wait a minute, this does not look awfully bearish at this point because there are people actually going in with calls. There's a lot of flow for calls coming in right now. So if you see over here, we actually had a bit of a rejection, which was to be expected in this region. And then we had a little bit of chop over here. If we're going to speed it up a little bit, that's a result of the flow coming in, trying to fight. Hey, I'm going to try to buy this dip. And, if you're playing 0 day to expiration, this would have killed your contracts, this kind of chop over here, because they're going down a little bit and up a little bit, down a little bit and up a little bit. But eventually, we started breaking to the downside. That is what happened there. The puts started increasing again, and the call started decreasing again. And so, this could have been a second position or a second trade that you could have went in on the break of this level with the increase of the puts being there. You could have taken this trade, and technically, I would have had my target over here, the 42.20. It almost hit it. Finally, kind of like came in within 0.75, if I'm not mistaken. But it wasn't that strong of a bearish action because let's look again. Calls are actually over the zero and they're increasing. And so if calls were actually falling below the zero, I would say we would have more than likely seen a stronger bearish action towards this target, but that did not happen. And you know, it's just a great tool to actually have because, from the beginning of the day that that, hey, it's awfully bearish, or like if it's not awfully bearish, it's more bearish than it is bullish. Chances are you'll do better selling the rips rather than try to play reversal calls. You know, you will do better doing that than trying to go against the flow of the big money. And but again, there's just for the nature of the day, I don't like seeing both of them getting close together. That means choppy action, especially if they're close to the zero. That means there's not a whole lot of money coming into the market. But them getting closer together, it's more like a tug war at that point, between the bulls and the bears. It seems like the bulls were taking control a little bit more, but still, the bulls are not giving up. And see the call volume is increasing, it is increasing. And look at the price action down here on this white line. You had a lot more defined move whenever the puts were higher than the zero moving up and the calls were lower than the zero moving down. The minute the calls started going up, look at the price action overall on SPY. It becomes choppy. And so when this happens, I would say, hey, I'm just going to sit on my hands and watch. Now, if you had a different action, like what we shown in the example before, where you had a lot more bullish, I'm sorry, a lot more puts than you have calls, then yeah, I'll probably be selling every rip and it would be fine. And I would make money doing that. However, you see here, both of them are above the zero, both of them getting close together. That would make me think that I probably just want to stay out of it. This is more choppy than anything, so I would just rather save my money. It was a Friday. I figured there's no reason for me to risk it. And, I took the first play and it was good. And I was not going to risk it anymore on this. Hopefully, this video was useful to you guys. I try to make it as short as possible, try to give you an example of how I use it to trade, at least like how I use it to trade SPY. And if you have any questions, feel free to DM me or any of the guys in the tool. They will be more, I'm sorry, in Discord, I mean, they will be more than happy to assist you. Thank you so much, and I'll see you in the next video.